SEBI, NSE BSE IPO, Demat. If financial news sounds like alphabet soup to you, you are not alone. Every industry builds a wall of jargon around itself, and the stock market is no exception. Most beginners quietly give up in their first week, not because the concepts are hard, but because nobody ever sat down and explained the vocabulary first. Today, we tear the wall down, one term at a time, so that nothing your broker's app shows you ever feels intimidating again. Welcome back to Equity Trade Siksha. In our last episode, we covered the real difference between investing and trading, and the discipline that separates the trader from a gambler. Today, we decode the language of the market itself. This is, quietly, one of the most important episodes in this entire series. Because until these terms feel automatic to you, every news headline, every broker notification, and every research report will keep feeling like a foreign language. By the end of this episode, every acronym you hear on financial news or on your broker's app will make complete sense, and you will be able to follow real market commentary without translating it in your head. Let us begin. Every market needs a referee, someone who sets the rules and enforces them without exception. In India, that referee is SEBI, the Securities and Exchange Board of India. SEBI protects investors, regulates brokers, and oversees every listed company operating in this market. If a broker mistreats you, if a company misleads its shareholders, SEBI is the authority with the power to act. Working alongside SEBI, but with a different role entirely, is the RBI, the Reserve Bank of India. The RBI is Hindi, a central bank. It manages interest rates, controls the currency, and regulates the banking system as a whole. These two institutions rarely make headlines for exciting reasons, but together, they are the foundation that makes the entire market trustworthy enough to invest in. You already know the two exchanges from our very first episode. The NSE, the National Stock Exchange, established in 1992, and today India's largest exchange by trading volume. And the BSE, a Bombay Stock Exchange, founded in 1875, the oldest exchange in the whole of Asia. But here is something most beginners never think to ask. Where exactly are your shares physically stored once you buy them? The answer is they are not stored at the exchange at all. They live in what is called the depository. NSDL and CDSL are India's two depositories. Think of them as the bank vault for your shares, except everything is electronic. Your actual holdings sits in what is called a demat account, short for dematerialized account, linked to one of these two depositories through your broker. Now, where do shares actually come from in the first place? A company's very first sale of shares to the public is called an IPO, an initial public offering. This is the moment a private company opens its ownership to the public for the very first time. If that same company later decides to issue additional new shares to raise more capital, that is called an FPO, a follow-on public offer. Both of these raise fresh capital directly for the company itself. This entire activity is called the primary market. But here is the distinction that trips up most beginners. Everything you trade daily on your broker's app happens in the secondary market, where existing shares simply change hands between investors, and the company itself receives nothing further from that transaction. Two major categories of big money consistently move Indian markets, and you will hear both terms constantly in financial news. Few foreign institutional investors are overseas funds investing in India from outside the country. Domestic institutional investors are Indian mutual funds, insurance companies, and banks investing from within. When you see financial news reporting heavy FI selling on a given day, that single data point can move the entire market in a single session, even when nothing about individual companies has actually changed. Understanding who is buying and selling at this institutional level gives you real context behind daily market movement, well beyond just the headline number. You will constantly hear two numbers quoted on the news on your phone in casual conversation about the market. The Nifty 50, the NSE's benchmark index of the top 50 companies by free float market value, and the Sensex, the BSE's benchmark index of 30 large, established companies. When someone says the market is up or down today, this is almost always what they mean, a summary of these index numbers, not any single stock. Learning to glance at these two numbers and understand what they represent is the fastest way to sound and think like someone who actually follows markets. One practical fact before we close this episode. The Indian stock market runs on a fixed schedule every single trading day, without exception. A pre-open session from 9 a.m. to 9:15 a.m., where the opening price is determined. Normal trading from 9:15 a.m. to 3:30 p.m., the main window, where almost all activity happens. And a closing session immediately after, which finalizes the day's closing price. All of it always in Indian Standard Time, regardless of where you personally are located when you place an order. Let us bring this entire episode together. SEBI regulates the market and protects you as an investor. The RBI manages the broader financial system around it. NSE and BSE are the exchanges where trading actually happens. NSDL and CDSL hold your shares electronically in your demat account. An IPO is how new shares are born in the primary market. SPIs and TIEs are the big institutional players whose flows move prices. And the Nifty and Sensex tell you, at a glance, how the entire market is doing on any given day. In our next episode, we open a real trading account together step by step. Every document, every form and every charge explained clearly before you begin, so there are no surprises on day one. Until then, keep learning the language of the market, a little at a time, and it will stop feeling foreign faster than you expect. I will see you in episode 3.